Hi traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to be breaking down one of the most powerful trend reversal signals in trading, and that is the double top indicator. Now, if you have ever wondered how to spot major market reversals before they happen, then this is the video for you. Okay, the double top pattern is a key chart formation, right? You can see like an M pattern. This gives us a double top. So the double top pattern is a key chart formation, that helps traders identify when a trend is losing momentum and might be about to reverse. So in this video, we'll cover what the double top indicator is and how it works, how to identify a strong double top pattern on the chart, the best confirmation signals to avoid false breakouts, and how to use the double top indicator in a trading strategy. So stick around until the end for examples and practical trading setups, all right? And don't forget, smash that like button, subscribe to the channel, and turn on notifications so you never miss an update. All right, let us just jump right in. Now let's start with the basics. What exactly is the double top indicator? The double top is a bearish reversal pattern that signals a potential trend reversal from an uptrend, right? From an uptrend to a downtrend. Right? It's as easy as that. Now, it occurs when price reaches a resistance level twice, but fails to break higher. Right? We can see what happened around here. Right? This was the first time that the price got rejected around this zone, and then it came again and got rejected again, right? For the second time, you can see that we had two rejections around this resistance zone. So that is why we call it a double top pattern. Okay, so here's how it works. For the first peak, price moves up and reaches a high, then pulls back. Then for the second peak, price moves up again, fails to break the first high, and pulls back again. Then we have a neckline, right? We have a neckline. For the neckline break is if price breaks below the support level. This support level that is in between, the two highs, right? It's called the neckline. So when price breaks below it, it confirms the pattern and signals a potential downtrend. So the double top indicator is highly effective because it represents buyer exhaustion, meaning bulls are struggling to push the price higher and sellers might take control. Now that you know what a double top is, let's just talk about how to identify a strong pattern on your charts. Okay? First of all, you should be looking out for clear peaks. All right? The two peaks should be nearly the same height. Now, even if it is not perfectly the same height, right? When I say perfectly, I mean literally exactly the same price level, the highest point. You might not always find that, right? But they should be nearly the same height. You can see this is the highest point for this second peak. You can see this is the highest point. Then this is the highest point for the first peak. So you can see that they are nearly the same height, approximately the same height. So you should have the two peaks to be approximately the same height or nearly the same height, okay, showing a strong resistance level. Then you should have a well-defined neckline. The support level between the peaks is what we call the neckline, and it should be clear and not choppy. All right, then you should have volume confirmation. Okay, for example, you can decide to add a volume indicator, right? For example, you can actually decide to add a volume indicator to the chart, and then you'll be watching out for volumes, right? Watching out for volume increases and decreases, okay? So basically, if we have a decrease in volume at the second peak, right, it can indicate weak bullish momentum, and you can see that happened around here, strengthening the reversal signal. Okay, then finally, time frame matters. The double top is more reliable on higher time frames, like the 4 hours or the daily chart, or maybe 1 hour chart, right? You can see that this is the daily time frame. So the higher the time frame, the more reliable the signal. That is how it works. Okay, that is how it works. The higher the time frame, the more reliable the signal. Okay, now a warning: not every price dip that looks like a double top is a real reversal. Okay, so just take note of that. It's important to always wait for confirmation. Waiting for confirmation is key. Okay, now one of the biggest mistakes that traders make is entering a trade too early without proper confirmation. All right, so here are the best ways to confirm a double top. The first is the break and retest of the neckline. You can see we had a break and retest. This was the breakout, and this was the retest, right? So once price breaks below the neckline, wait for a retest. Okay, wait for a retest. This was the breakout, this was the retest. All right, so if price fails to reclaim the neckline and rejects downward, it confirms the reversal. Then you can also watch out for RSI divergence. Okay, if you want extra confirmations, you can actually watch out for the divergence signal from the relative strength index. Okay, in a situation whereby price forms a double top, but the RSI is making lower highs, can you see? We had that form around here. So whenever price forms a double top, but RSI is making lower highs, this is a strong bearish divergence, signaling weakness in the uptrend. Okay, and then finally, we already talked about the volume drop. All right, we already talked about volume drop. So when you have a decline in buying volume, right, at the second peak, it suggests that buyers are running out of steam, making the pattern more reliable, like what we had here. Okay, so now a pro tip: always combine the double top with other indicators like moving averages, your volume indicators, your RSI, Fibonacci retracement, and all of that, just for added confluence, okay, for you to get added confirmation. Now that we understand how to identify and confirm a double top, let us go over a simple trading strategy. Okay, for your entry strategy, wait for the neckline to break. All right, do not just enter just because the price forms too peak. Okay, confirmation is key. Always get your confirmation. Then when the breakout has happened, look for a retest. Okay, if price breaks the neckline, breaks below the neckline, and retest it as a resistance, it strengthens the reversal signal. Then you can enter a short trade once price starts rejecting off the neckline. Then for your stop loss placement, you can place it above the second peak. All right, you can actually place your stop loss above the second peak, right? Your stop loss can be placed above the second peak. This keeps you protected in case of a false breakout. Then for your take profit target, you can actually measure the distance between the peaks and the neckline. All right, you can measure the distance. Sorry about that. So you can just use your measuring tool. You can use your measuring tool and measure the distance between the peaks. These are the peaks, right? The peaks and the neckline. So just use your measuring tool and measure that. And you can see we have about 180. Well, just say 180, right? So when you measure that, then you project that same distance, right? Project that same distance downward from the neckline. So we should be having minimum of 180, right? Okay, so you can see that about 200 and something aligns with a support. You can see we have a support around there. So this would have even been a perfect place for taking our profits. That would have really been a good place to take our profits. right around that support. Okay, so once you project, the distance between the neckline and your peaks, you target the same distance downward from the neckline for a reasonable price target. Now, before wrapping up, let us go over some common mistakes that traders make when using the double top indicator. The first mistake is entering too early. Always wait for the neckline break and confirmation before taking a trade. Secondly, do not ignore market conditions. The double top works best in trending markets. Okay, so if the market is ranging, the pattern might not be as effective. You should always watch out for that pattern after an uptrend. There must be an uptrend before the double top pattern. Okay, if you want effectiveness. Then finally, do not forget to check volume. Okay, a low volume during, after the second peak signals a strengthening of the signal, right? It means that the signal is strong, rather. Okay, but if the volume increases at the second peak, then the pattern might fail. You might actually have a breakout. Okay, a bullish breakout. So that is it. Now, one of the best practices is to use multiple confirmations before entering a trade. The more signals aligning with the double top, the stronger the trade setup. Okay, so that is a wrap, traders. Now you know exactly how to identify, confirm, and trade the double top pattern like a pro. Okay, have you used the double top pattern before in your trading? Drop a comment below and let me know. Okay, if you found this breakdown helpful, hit that like button, subscribe to the channel, and turn on notifications so you never miss a trading tip. I'll see you in the next video. Happy trading.